The recent decision by the Bank of Japan to raise interest rates to their highest in 15 years has significant implications for global financial markets, particularly for yen carry trades and US stocks. A yen carry trade involves borrowing money in a currency with low interest rates like the Japanese yen and investing in assets denominated in higher yielding currencies. This strategy capitalizes on the interest rate differential between the two currencies. Historically, the yen has been a popular funding currency for such trades due to Japan's prolonged period of low or negative interest rates. On July 31st, 2024, the BOJ's unexpected rate hike sent shockwaves through the forex market. The yen surged to its strongest level against the dollar since March, with the dollar dropping from 161.9 yen in early July to 150.2 yen. This move, which is the largest rate increase since 2007, came shortly after the BOJ ended 8 years of negative interests. The rate hike has profound implications for yen carry trades as the interest rate gap narrows between the yen and other currencies. The attractiveness of borrowing in yen to invest elsewhere diminishes, and this has led to a reassessment of carry trades, with investors potentially unwinding positions. The recent increase in yen volatility further complicates the carry trade environment, as high volatility can prompt rapid adjustments in investment strategies. The unwinding of yen carry trades can ripple through global financial markets, including US stocks. Carry trades have driven demand for higher yielding assets, often benefiting stock markets. A shift away from these trades might lead to reduced capital flows into equities, potentially pressuring stock prices. Additionally, as global interest rate expectations shift, market volatility may increase, further impacting stock performance. In summary, the BOJ's rate hike marks a significant shift in the forex landscape, challenging the dominance of yen carry trades and potentially influencing global financial markets. All right, viewers, for more on this, we are now being joined by Ajay Bagga, market expert, who's joining us live from Mumbai. Mr. Bagga, thank you so much for joining us on World Business Watch. Do you see an end to yen carry trades anytime soon?
No. What we have to watch out for is a disorderly unwinding. And, what has been an issue is the retail Japanese investors were at 18-year high of borrowing at very cheap rates and investing into the stock market. So that $30 billion margin calls is happening right now in Japan, and we have seen the markets going down by a very sharp 20% over the last 1 week. That is one reason. The second reason has been that this is the very low to negative rates in Japan have been going on for decades, that the market got very complacent. The biggest trade on the market was short Japanese yen, so sell Japanese yen and buy big technology US. Both legs of that trade are unwinding very fast, and they are causing mayhem. So Japanese carry trade still makes sense because you can borrow still in 0.25%. But what has cut this trade is that the Japanese yen has appreciated in the last 15-20 days by nearly 10%. So what people were betting on, the Japanese yen had been depreciating over the last 3 years, plus you could borrow at 0% and invest anywhere else. It was a no-brain money-making scheme. That has got unwinded and has got unwound. And how disorderly this will be, that is the key question. Right now, it's looking disorderly.
Mr. Bagga, if you were to just look at a more international impact of this, particularly in the US, what impact do you feel will BOJ's monetary policy have on US stocks and other equity markets?
See, there is a lot of investments by money raised in Japan through this carry trade, which goes into global markets, both emerging markets and US markets, and it goes into currencies. I'll give you one example, like the Mexican peso. So the Mexican peso got hurt by the new communist government getting elected, so sentiments got spoiled, and then this carry trade unwinding. You've seen the Mexican peso, which was a very appreciating kind of a currency, doing very well, coming down. So there will be a lot of money. There is no official number on the amount of this yen carry trade. Some talk about $800 billion. Some estimates are as large as $4 trillion. So not all are sitting in, say, Australian dollar or Mexican peso. A lot of it is in other risk assets, and that unwinding is happening. I'll give you a small example. Look at Bitcoin. Bitcoin has come down from $65,000 to $53,000. Actually, Bitcoin should be a safe haven in times of trouble. But it's clearly showing that leveraged money was sitting in Bitcoin as well, or profits were booked in Bitcoin, whatever it may be. But the correlation of Bitcoin to other risk assets is something that's come out, while gold is holding its safe haven position. So very clearly, it's showing that this Japanese money was all over the world in all kinds of risk assets, and now it is getting pulled back on margin calls.
And definitely the consequences and the impact will also be felt globally as we are experiencing. Thank you so much for joining in. That was Mr. Ajay Bagga, market expert, joining us from Mumbai. Pleasure speaking with you, sir.
Thank you for calling me.